Is this low volatility, that tight band that Morgan Stanley talked about for commodities, here to stay?
Yeah, Alex, good question. You know what? We think that oil is set up for a second half comeback. But when we say that, we think oil is probably range bound at $50 to $60 long term. And in the second half of the year, oil probably gets back to probably $50 a barrel. And will be a result of declining U.S. inventories as well as global inventories as well falling in the second half of the year.
I mean, sitting on the desk and seeing the swings that we've seen, all of a sudden we're at 55, then boom, we're back down at 45. But is the actual volatility as extreme as it feels?
Yeah, well, in the energy sector, you have seen some volatility in the stocks. There's no doubt about that. So if you're an investor, what you have to remember is there are multiple ways to make money in the energy sector. Now, you can buy some of the volatile oil and gas stocks that go up and down based upon the commodity price. But one area that we really, really like are essential assets, energy infrastructure assets, because these type of companies generate steady, fee-based revenues that actually don't go up and down like the oil price. So the great thing about energy infrastructure assets, they pay investors really good dividend yields. It's a great time of year to be looking at dividend or at these energy infrastructure stocks because you're going to get a big fat dividend check at the end of this month or in early August.
I'm glad you brought up MLPs because we heard yesterday that BP could be spinning off its MLP unit and IPOing that. But the trend in MLPs has been rolling them back up and removing and reversing that trend. Why is that, and does that constrain opportunities for you?
No, it doesn't. The universe is quite vast, and whether it's an MLP or a corporation, it really doesn't matter. Energy infrastructure is the key. That's what we're really excited about. These are essential assets. These are companies that every single year, every single quarter, grow their cash flow, and it's because volumes are going up, right? I don't think there's any doubt that U.S. oil production volumes are going up. U.S. natural gas productions are going up. U.S. natural gas liquids productions are going up. And we need more infrastructure. We're going to need more infrastructure to transport all of those products. So who's going to do that? It's U.S. energy infrastructure companies. The great thing about infrastructure is you don't have to worry about rising oil and gas prices affecting their cash flows. All you have to worry about is the volume going through the pipeline.